Okay, so good morning, everybody, and welcome to this FXStreet webinar. I hope you've all had good weeks in the markets. You've all been doing well. Thank you for attending this morning, and thank you to FXStreet for putting on this webinar. As always, what we're going to talk about today is part-time trading for full-time profits. Now, what does that mean exactly? Well, ultimately, there's this common misconception that the more time you spend in front of the screen, the more money you can make. Now, even though in some cases that can be true, it doesn't have to be. If you trade smart, if you manage your risk accordingly, if you have the right strategy, you'll find that actually you can trade the markets with a full-time job, so trading a 9-to-5 job, so basically part-time trading, but make profits that would equal what someone sat in front of their screens all day doing. And the way that basically works is you manage your position sizes accordingly. So when you're day trading, for example, you might take smaller positions. Okay, you'll have, because you'll be taking a number of trades in a day, you don't want to be taking 2% risk on only one position, right? Because you might be in 4 or 5 different trades in a day, and you could wipe out 10% of your account in one day if you're taking too high a risk. Well, when you're trading with longer term charts, you're not going to be in as many trades. And if you use a solid system, okay, and you look at multiple time frames and things like that, you can actually get to a point where you are taking 2-3% risk on a trade with a positive risk reward. So let's say, for example, 2-to-1 risk reward, or 1-to-2, however you want to term it, and be making sort of 4, 5, 6% on the trades that you take. And if you're taking even 2 of these a week, and let's say that of those 2 a week, or so 8 over a month, 5 of those are profitable, 3 of them lose you money. And when you're losing money, you're losing 2% a trade. So those 3 would cost you 6%. But when you're making money, you've got 2-to-1 risk reward, or reward to risk, and therefore you're making 4%. You'll see that you're making double-digit returns each and every month, whilst not really having to put a lot of effort into it. And the great thing as well about trading longer-term charts and swing trading is that you aren't sat in front of the screen all of the time. So you're not going through the same emotional roller coaster as someone who sat there staring at their screen every minute of every day. Now, I'm not saying for one moment that day trading isn't a nice way to trade. It's actually my preferred method of trading. I like day trading. I like being active in the markets, but I appreciate that there's a number of you out there that it's just not possible because you have day jobs, you have other commitments. Maybe you're retired, but which is fine, but you don't want to spend all of your time in front of a screen. You've worked all of your life and now you're retired, and you're retired for a reason, so that you can be a bit more laid back. So you don't want to be sat in front of your screen all day long. And that's where a trading system like this can really, really come into its own. All right, does that make sense? So before we begin, we have to do the usual disclaimer, and that's to say the content of this webinar is not investment advice. Okay, it's got to be used purely for educational purposes only, and all the participants are advised to seek their own counsel prior to investing or entering into any trade. Spread betting and any other type of financial trading carries a high level of risk to your capital, with the possibility of losing considerably more than your initial investment. The content of this webinar may not be suitable for all investors, and an individual should ensure that they are fully aware of the risks involved. And if necessary, you should seek the advice of an independent financial advisor. All right. So I hope that all makes sense. A little bit about me. If you don't already know me, my name's Alex Ong. I'm the co-founder of a website called Traders Corner. The web address is traderscorner-online.com, and over at that website, we teach everyday people like yourselves to make money trading the financial markets, whether that be FX, futures, equities. We will teach you how to make money. We've been trading since 2005, so about the last, 2015, about the last 10 years now. We've co-authored many articles for FXStreet, FX Journal, FX Trader, Investing, We've been quoted on the NASDAQ a number of times, and we're the co-author of a number of different strategy guides, and I'm an FX coach. If you want to find us on Facebook, it's facebook.com/Traders Corner Online, and my Twitter handle is @AlexOngUK. So that is me. Enough of the introductions. Now let's get on to the good stuff, the stuff that you've been waiting for, right? Which is the strategy to make money in the markets. So let's get rid of that. So the strategy I'm going to show you is a very, very simple strategy. All right. It's one that will make you money in the long run, as long as you give it let me move these chat boxes over here. If you learn it properly. If you try to rush into things, if you try and force things, then yes, you're going to come unstuck. You'll find it very difficult to make money. However, if you're someone that's willing to put in the time, okay, put in the time to study the system, to learn it, to backtest it, then you will make money. So what is the system? It's a swing trading system. We base it on a number of different time frames. So you would be looking at the daily charts, all right, the 8-hour chart. And I know for some of your MetaTrader that might be a little bit difficult to get, but not to worry, because you can then also jump down to the 4-hour chart. You need the daily and the 4-hour at a minimum. But if you can throw in the 8-hour chart as well, that allows you to get into some nice moves. On the dailies that maybe you don't get on the 4-hour charts. All right. So the chart setup, most important. What do we have on our charts? Well, we've got a number of different indicators. We've got the CCI, which is my favorite indicator. The CCI is a cycle indicator, so it alerts a trader to bullish and bearish cycles in the market. All right, that's very, very important. So the CCI is ultimately our trigger to be able to get into or out of a trade. What we do is, if we're looking for a long opportunity, and I'll explain to you exactly what a long opportunity is, but if we're looking for a long opportunity, we want the CCI to move from below the positive 50 line, which is this line here, to above it. So we literally want the CCI just to move from below the 50 to above it. That will signal a trigger to enter. Right? And we do that on the close of the candle. We don't do it whilst the candle is building, because the CCI whilst the candle is building will be flickering up and down, up and down, up and down. We're only interested in taking it once we know that the CCI isn't going to be changed. So we do it on the close of the candle. So the CCI is our trigger to enter. You'll notice that my charts look a little bit strange. The candles look way, way, way too smooth, right? It doesn't look like regular candle price action. So what's the difference? I'm using Heiken Ashi candles. Now, I love these. I really, really, really do love Heiken Ashi candles. They just really help smooth the price action. And it makes it easier to see trends. And it also makes it easier to stick with trends as well. So I overlay Heiken Ashi candles onto my charts, as you can see here. And looking at this, hopefully you can see that actually, wow, this is very, very smooth. This is a sort of chart that perhaps you'd want to be trading. Okay? Heiken Ashi candles. And lastly, we have 3 moving averages. Now, moving averages are one of my favorite indicators. I did a study probably 7 or 8 years back based on a trading system where it's just a pure price action trading system, trend trading system, right? And it was profitable. It made you money probably 50 to 60% of the time. Wonderful. Now, what I did is I did a test where I overlaid moving averages. So I put 3 moving averages onto the charts. And the ones you have here, the 25, the 55, and the 100 exponential moving average. And what I did was I looked at all of the entries, all right, during a back testing session. I looked at all of the entries you would get on a price action chart. I noted them down. I then put the moving averages on there, and I only took the entries where the moving averages agreed. So for a long opportunity, the moving average, the 25 has to be above the 55 and the 55 has to be above the 100. Okay, so that's the 25 above the 55 and the 55 above the 100. All right, that will signal that you're looking for long opportunities. It's not saying you have to take a trade. It's just saying the conditions are right for a long opportunity. If the 25 is below the 55 and the 55 is below the 100, that signals that the markets are right for a short opportunity. All right, so the market condition is basically giving you an indication that it's going to move lower. All right, and that's all it does. So what I did when I did this testing session is I went back over all of those charts. I threw on the moving averages, and I ultimately said to myself, we're only going to take trades where the moving averages match up with the where the trade matches up with the moving average. Sorry, and what I found was actually quite surprising. So the strike rate went from about 50 or 60%, and it jumped a whole 10 to 15%. So instead of, I think the actual number was about 55, 56%, and it jumped from there to about 73% strike rate just by adding the moving averages there. Now, the question is, does that make you more profitable? Because obviously you're taking more trade with the 55 without the moving averages. So in theory, if you've got a positive risk reward, you can still be more profitable. And the answer to that is it was very, very close. So there wasn't much between it. However, where it really has an impact is on the trader's psychology. So if you imagine you are taking trades where you are right 70 to 75% of the time, okay, you're going to be more confident about trading that way. You're not going to be as inclined to throw that system in the bin and look for another trading system where you would be if you had a 55% strike rate. If you found that you were wrong nearly 50% of the time, as a human being, regardless of what we say, psychologically, that's quite difficult to take. All right, no one wants to be wrong that amount of time, regardless of whether you're making money or not. It's quite a battle that you have to go through every time you're in a trade, because it's like flipping a coin. You don't have any real confidence as to whether you're going to be right or not. And that's very, very important to a trader. And on top of that, if you don't have confidence and you're not right a good proportion of the time, you can't really look to start to increase your risk per trade. And that's ultimately where you're going to start to make more money. So instead of taking 0.5% risk or 1% risk, suddenly, if you're confident with a trade, you can start taking 2 or 3% risks. And that's where I said you start getting into the double-digit increases in your account on a month-by-month basis. You see, so that's where you get full-time profits for part-time trading. And the wonderful thing is here, we're swing trading, so we're not going to be in and out of the markets many, many times in a day. You're going to look at your charts once or twice a day, maybe once in the morning and once in the evening. You'll then plan your trades based on that, and when a trade sets up, you take it. Does that make sense to everybody? You all still alive, still awake? Yeah? Excellent. Okay. So how do we trade this system? Well, first things first, you're going to have different position sizes. Okay. So what I mean by this is that there are going to be two types of trades. There are going to be trades where everything lines up. So you might be taking a trade from the 4-hour chart or the 8-hour charts, but you'll be taking it in the direction of the trend of the daily chart. Now, they're the trades where you can take more risk. On the other hand, there might be trades where you're trading during a pullback. So the daily chart is still pointing heavily to the downside, for example. However, on the 4-hour chart, you might have an opportunity to go long. Now, in those circumstances there, you're going to be taking less risk per trade. Okay? So the rules are very simple. We're waiting for the moving averages to be lined up. All right, so whatever chart that we're trading on, whether it be the daily, the 8-hour, the 4-hour charts, you want the moving averages to be lined up. So if the 25 is below the 55 and the 55 is below the 100, you are looking for shorting opportunities. You're looking for opportunities to sell the market. If the 25 is above the 55 and the 55 is above the 100, you are looking for long opportunities. You're looking for opportunities to buy the market. All right, you're getting to the market and you're expecting it to go higher. That's the very, very first criteria. And that's your permission to trade. All right, that's what that is right there. The moving averages are only your permission to trade. It's not to say that you're going to go and get into a trade. All right, because that's ludicrous. That's not what we're talking about here. It's your permission to go and look for a trade. Once we've got permission to look for a trade, so let's say, for example, we're looking at the Aussie dollar here. Okay, so going back to February, daily chart is trending downwards. The market falls off a cliff here. As you can see, we've got momentum, and this is something that's very important for this trading system. We're only looking to take a trade on a pullback once we can see momentum in the markets. So you're looking for the moving averages all to start pulling apart, and you want them to be a nice distance apart like they are here. Once you see that, so you see momentum in the market, you then wait for a pullback to around the moving averages. All right? So you want to see a pullback to within the moving averages. This is what we call our value zone. This is where we believe the market has taken enough of a breather. All right, so there's been enough of a price acceptance phase to constitute another move to the downside. Once the market pulls back within here, we're then looking for the CCI to move. We're looking for a short opportunity here. So we're looking for the CCI to move from above negative 50 to below negative 50. And that's what we get with this line here. So it's moved from above negative 50 to below negative 50. And I'll zoom into this chart here so you can see it. All right. And if it does that, all right, we've got one more piece of criteria here. And the candle, okay, so if it does that, and the candle that we're looking at is a strong candle, so it's not a doji looking candle or anything like that, then we can get in on the trade. So we would be in on this next bar over here. So we've got a pullback there. The market then moves lower. Okay, it triggers with the CCI there. We then get our opportunity to go short. And we take that, and the market sells off. Does that make sense? Are there any questions on that? The take profit, in the simplest terms, is 2 to 1, 2 times your risk reward. So you would place your stop above the highs. So on this example here, our stop would be at 0.8930. Our entry here was around the 0.87 level. All right, so you've got a 220 pip stop there. So you'd be looking for about 400 pips on that particular trade. And as you can see, it makes that really quite easily. Plenty of room to go. Regarding getting high Kanashi candles on MT4, I think some flavors of MT4 provide them to your standard, but otherwise you might have to look for an indicator out there. It's not that there must not be a level in the markets. If you're sophisticated and you've been trading for a while, you can look for a level to take profit. All right. And I would suggest that that's probably a better approach. However, for new traders, this is a very simple approach to making money. And that's the purpose of today's webinar. Okay. And you can see this sort of price action all over the chart. The downside here, we get a pullback to within our value zones, and then you get an opportunity to go short here. That one didn't go as far short as you would have liked. But you can see it all over the chart. Now, why do we have more than one chart up? Well, it's for moments exactly like this, because the daily charts, you aren't going to get that many opportunities. Okay, but it's nice to trade in the direction of the daily trend. So if you can trade in the direction of the daily trend, but you can look at other charts. So for example, the 8-hour charts here, you find that you'll get many, many, many more opportunities to trade the markets. And this is what the system's about. Okay, this is where you really start to make your money. So you see here, the market starts moving up. You wouldn't have got this opportunity on the daily charts. On the 8-hour chart, you can see momentum there. You can see the market pull back. And then we get our opportunity to enter. You enter on that candle there. Your stop is below the low, and you go to make your profit target. Again, the market momentum, you get a pullback to within the moving averages. At that point in time there, we look for our CCI to trigger. So the CCI moves below -50. We place our stop above, and we move on and on and on. And again, market momentum, we get a pullback. Look at the way the CCI keeps us out of the trades that aren't really going to make us money. So the market attempted to go higher at this point here, but the CCI didn't trigger for us. The CCI only triggered right at the bottom here, okay, which is when the start of the move to the upside began. And that's what's great about the CCIs. It does keep you out of some of the poorer moves. But what's important to understand is that you're looking for a decent pullback. So you're not looking to get involved in these little things here. You want the market to swing down, and then you want it to swing up into your value zone. So between the 25 and the 100 moving average. And it's at that point there that you look to take the trade. And this will work on any chart. All right. So we're on the Aussie dollar just because alphabetically that was one of the first ones up here. But let's skip across to the euro dollar and take a look. Slowly but surely, well, the daily ones opened initially, so we can go take a look at some of the daily opportunities there. So we know that the market's been falling off a cliff. Everybody's been making money in the euro dollar over the past year anyway. But this will show you that this would have got you in on those opportunities as well. So from the start there, October was the first opportunity you would have got on the euro dollar, but you would have taken 2 opportunities between October and February that would have made you a lot of money. However, that's on the daily chart. If we were then to go and take a look at the 4-hour or the 8-hour chart, eventually, when the market loads, always the case, isn't it? When you're trying to do a presentation, when you're looking to give an example, the chart just doesn't load for you. So if we go back here, you can see that before the October pullback, which is this one here, which we would have got in on, there are many opportunities to short the market. So here, market pulls back within our value zone. We get a couple of entries. This is the first valid one here. And the market proceeds to fall off a cliff. It then pulls back again, gives you another opportunity. The market falls off a cliff again. You then get an opportunity here. This one would have stopped you out. But then on our daily chart, we would have taken this opportunity and the market goes lower again. It's not a perfect system. You're not going to be right on every single trade. Of course you're not. But you will be right on a lot of them. And with the positive risk reward, you will make money. All right? Does anybody here trade similarly? Do you trade a system in a similar fashion? Yeah, now the 4-hour chart has decided to open. So again, at the moment, we're in a pullback in the euro dollar. If you're just trading the dailies, you're looking for a shorting opportunity. But if you come down to the 4-hour chart, you can see here that we've had some opportunities to make money during this pullback. Once, market pulls back again, twice. And you've got to look for the right price action. So you're not looking to trade in sort of this area here. This area here is complete crap. You want to be trading when there's momentum in the market and it pulls back to the value area. So for example, this here would be a trade that you'd look to take. Okay? It's back in August. Or back in October, sorry, not August. And as you can see here, the market pulls back into the value area. First attempt, you get stopped out. Second attempt, you make money. And this is shown all over the charts. You can actually dial this down into the 1 hour and the 15-minute as well, if you wanted to. The only issue with that, of course, is then it doesn't become part-time. Then it becomes a full-time job. And I'm assuming for a lot of you, that's something that's just not possible. Any questions? Can this apply to commodities? Absolutely. Absolutely. You can apply this to commodities. You can apply this to equities. You can apply this to anything. It's a very simple strategy. The great thing about this strategy here, oh, by the way, take a look at the pound dollar opportunity. Again, I guess no one really missed this regardless of the chart that you were trading, but just to show you there was a lovely opportunity here anyway. But yeah, just going back to what I was saying, the great thing about this system is it's not something that's been over-optimized. It doesn't just fit one particular market. And that's the important thing about trading longer-term systems. You can't have a long-term strategy that is so very specific that when the market condition changes, the system stops working. You can't do that, especially with long-term strategies, because the market condition always changes. So you need to have a system, a strategy in place that's going to make you money regardless of whether the market is, I mean, obviously, if the market's consolidating, we aren't in it, but the strategy needs to be able to account for that. It needs to be able to keep you out of those conditions when it's not favorable for you to be able to make money. Okay? Just having a look here. That's the pullback we got on the daily. But on the 8-hour charts, look at how many opportunities there were to go short. And this is what I love about this. Look here, you're not in because the market hasn't pulled back into the value zones. Here, you don't get the opportunity to enter because the CCI doesn't cross below negative 50. Here, no opportunity to enter as well. The CCI is not below negative 50 as the market pulls back. Then as soon as we get the CCI move below negative 50, the market then starts to move. And that's the thing that I love about the CCI. It's a cycle indicator, and it gets you into the trades when the next cycle is about to occur. Okay, so there's an opportunity to go long, the market goes higher. And once you get good at this, you aren't going to have a strict sort of 2-to-1 stopping. What you'll do is you'll manage your trades accordingly. You'll see what the momentum's like. You'll see where the market's going. You'll see where the levels are, and you'll trade according to that. And then you will see that your trading improves phenomenally. When you can start to read the markets, you'll suddenly get this quiet confidence that when you get into a trade, you're going to make money more often than not. Market pulling back, get an opportunity to go short. And because it's not so optimized to fit one particular instrument, as I said, you can throw this up on your equities charts. You can throw this up on your commodities charts. Because the point as traders, what we want to do as traders is we want to make money, right? The aim of the game is profitability. So whatever we can do to make sure that we're getting into the markets when we can make some money, that's the aim. That's what we have to do. Market pulls back, value zones, moving averages pulled apart, holding above this resistance level here. You get the opportunity to go long. The CCI crosses and look at the market. Off it goes. Are there any questions? Here's one. This would have stopped you out. Nothing you can do about that. Can I eliminate your losing trades? Unfortunately not. I wish I could, but unfortunately I cannot eliminate your losing trades. Are there any questions? Do you all understand the system? Again, another demonstration. It happens all over the chart. You can't make this stuff up. The market gives us a bearish candle here, but the CCI doesn't cross, so we don't get in on the trade. If we had gotten in on that trade, we may have been stopped out by this candle here. The first opportunity is on this candle here, and sure enough, the market goes lower. Any other questions? Are you all either thoroughly confused, excited and speechless, or I've explained it so very well that you've just got no questions to ask whatsoever? Yeah, the strategy for taking profits, for me personally, Pan on Fire, is to look for levels where I think there may be an issue. So if I'm trading on the 4-hour, the 8-hour chart, for example, I'll look at the daily levels and try and trade up to those daily levels. That is ultimately the way to trade it. That's the best way. Once, obviously in the beginning, you'll start with a set take profit level, which is normal for people that are just starting out in trading. But once you get good at this, once you get experienced, then you need to move on to the next level. And the next level is picking out levels is picking out areas where you believe the price is going to go to. And if it does get to that area, then it probably is going to struggle to go any further because of a significant support or resistance. And that's how you'll make money. That's how you'll make a lot of money. I know people don't like to hear that. So a lot of new traders or struggling traders, they want the ABC, follow this, this, and this, do exactly this, and you will make money. They don't like to hear that there's any discretion involved. They don't like to hear that you have to use your brain at some point in order to be able to make money. But you do need to do that. And if you do, then in the long run, you will find, if you're happy to engage your brain, in the long run, you will find that it is going to pay you. I have no doubt about that. Look at these opportunities here. The first opportunity to go long. At 2 o'clock, you get in there, and the market, a few hours later, 6741, 100 pips up on that trade there. Why are you laughing? Is it because you know it's true? Okay, so here's a question to you all. Use your brain. What brain? That muscle between your ears. I'm sure you have one, Pan on Fire. I'm sure you do. Here's a question to you. Who here on this webinar trades live? It's quick yes or no. No, you don't trade live. Alexander, you do. Who here trades live and is profitable? Silence. Yes? Ah, good man. As there's only two of you answering these polls here. Yes, you are with my snapback strategy. Excellent, Alexander. Shameless plug there. Well, it's not me plugging it, but thank you very much. So, Pan on Fire, why are you not trading live at the moment? Is it fear? Is it that you haven't found the right opportunity? It's your day job. So do you think using something like this, looking at the markets in the evening, you may be able to use it to make some money? To dip your toe in there? Even if you open up a small account, I can't tell you how important it is to try and get some time in the trenches, to try and get some experience actually entering trades and experiencing the negative emotions that inevitably you are going to face. We've got a few minutes left on this webinar, so feel free to get it in. No questions at all. Could you use this with fixed odds betting? Stephen, yes, you could. You could, in the sense of looking for, I guess you're talking about one-touch bets and no-touch bets and things like that. Am I right? Yeah. Yeah, I mean, you could. Any system that helps you find the direction of the market and give you a good indication of where the market is going to, you can obviously use with fixed odds betting. So, for example, if you're in an uptrend and you get a signal to go long, all right, so let's say here, for example, hypothetically, so we get a signal to go long here, you could then put a no-touch bet below that level there at 1.5012. Say you don't believe the market's going to touch that level over the next day, week, whatever. And most of the time, as you can see, once you get these triggers here to say you're going to go long, even if the market trades against you, it doesn't do it immediately. So once you get that trigger there to say go long at that moment in time, and you put your stop below that level, say the market's not going to touch 1.4994 in the next 24 hours or in the next week, most of the time you'll be okay. Are you going to give it a go with fixed odds betting then, Stephen? To an extent, yes, Pan on Fire. I don't know the exact calculation, to be honest with you. I'm not too bothered about it, but more or less within a few pips. It's actually the average of the previous candle is the way that it displays a new one. Okay, well, if there are no other questions, then I guess we'll wrap it up here. So I'd like to say thank you to FXStreet for putting on this webinar. As always, you guys do a great job over there in Spain. Honestly, these are, for any of you that are new to FXStreet, there's so much information on their website. You really need to pay attention to it. There's great analysis from different analysts, different traders. It really should be your one-stop shop in terms of FX trading. You know, FXStreet have been around for a long time. And if you're serious about Forex trading, then you need to spend your time here. I know that it's kind of appealing to spend all of your time on forums, so Forex Factory and stuff like that. But this is where you're going to get the real value. The amount of webinars that they have from different educators as well. There's going to be something that fits all of your styles. So thank you very much, FXStreet, for all of your time today. Really appreciate it. Thank you very much, everybody else, for attending this webinar. I hope you found value in it. I hope you take it away now and you give it a go. Do a bit of testing for yourself. And otherwise, I will see you. We've got an open webinar coming up in 2 weeks' time. So we'll speak to you on that webinar. Or I'll see you on the next premium webinar. So thank you very much for watching this. And I look forward to speaking to you all soon. And thank you very much, FXStreet, as well, for having me today. Okay, so take care now and good trading.